Hey folks, Steve Alcorn here with you once again. Welcome back to the channel. This is number 2 video in the series of videos on how we got into $50,000 of debt and how we're getting out of $50,000 worth of debt. These videos will be filmed as events are going on, so you'll know when things happen. We're going to share the successes, but we're also going to share the failures. We're going to put these videos in a playlist so you guys can follow along a little bit easier. And if you're not subscribed, please consider doing so. And there's that little bell you can click on to get all notifications. And that way you can follow along a little bit easier. If you haven't watched the first video, I suggest you go ahead and go back and watch that one because it gives a little bit of background of what happened and where we're at and what we were planning on doing at that time. This is a couple days after that first video. So we'll give you a little update and maybe a little where we're going from here or where we're thinking about going from here. The first video we talked about a home equity line of credit. We had applied for that morning. Today we got a phone call from the bank. Now we expected this process to take weeks. It didn't take weeks. It took 2 days. And we were denied for that loan. Declined. Gone. Off the table. Some of you in the comment section of the first video were concerned about that type of loan. We understand your concern and took that into consideration. I do want to say, though, that we haven't picked any form of relief yet. We don't know exactly where we're going. We have applied for some of these loans, but we haven't accepted anything, and we aren't going to accept anything that we feel is not right for us. I want you folks to understand that we will do what we feel is best and right for the situation at the time of the situation. And so that's how we'll go about that. So because we were denied for that one, it didn't take everything with the bank off the table. We had still applied at the same time for a home refinance with a cash out option. Cash on top of the refinance is, I guess, what it is. So in other words, you're refinancing what you borrowed on the home or currently owe on the home plus some cash on top, the equity, basically. It's a little different than the home equity line of credit, but in kind of the same thing, I guess, in a way. In the end, long run, it'll be the same for us. What will happen with this loan, however, is it will increase our monthly payments if we actually take this one, our house payments. And a lot of you will not like that idea, and I understand that, but let me talk about why it might be an option for us. Number one, we have really significantly high credit card payments right now. We're talking a couple $1,000s a month just in credit card payments. That doesn't include anything else. So those monthly payments are holding us back from going out and buying inventory for our business and doing things like that because we just don't have the extra spending money right now. Our mortgage payment currently is in the $570 range, I believe. It might be a little more, a little less, but it's in that range. If we take the refinance option, and I'm saying if, we haven't chosen anything yet. If we take that option, it will increase our mortgage payment, but it will only increase it by a couple $100s. So in essence, what would happen is the money that's cashed out, the cash out part, will go to pay off the credit cards, the $50,000 in credit cards. The payment on that part of the loan is only an additional $200 or so, somewhere in that range. So that would, in essence, reduce our credit card debt from some couple thousand to a couple hundred. And what it would allow us to do is then breathe, give us some breathing room. It would extend a period of our loan, and our interest rate would change, I'm sure, because we've refinanced at a lower interest rate a while ago. Just refinanced what we borrowed, not any cash out, a while ago, because the interest rates were lower at the time, and they are higher now, and I understand that. That is a risk that we will have to look into and think about, but this is where we're at right now. What I do know is that whatever the interest rate is on a loan like this, it has got to be less than the 18 to 22% you pay on credit cards. Now, I'm sure that some of my credit cards are a little lower than that, but we're still in a pretty high interest rate range. And so it is an option. It's on the table. And we talked to the gentleman today, the loan manager or whatever they call them. I know the term. I just can't think of it right now. And he seemed to think our chances were better with this one than with the home equity line of credit, just because of the way you do things. Also, the fact that we pay every bill on time every time will play into that. We have a really good credit history with really good credit ratings. Now, mine's a little bit lower right now, and there's reasons for that too. When I say lower, I'm still in the above 700. When you use a certain amount of credit as opposed to how much credit you have. So I have, let's say you have $1,000 worth of credit. If you use $500 worth of that credit, you're at 50% usage. So on my credit cards currently, I'm around that 50% usage mark. Once you get above 30, it starts to get a little hairy for your credit score. And so that's why my credit score is lower than it used to be. I used to have almost an 800 credit score for a while. And we were able to pay credit cards every month and get it done. And so my credit score had gone up quite significantly. But currently it's above 700, but it's in the low 700s. My wife's is a little bit better than mine, but that's where we're at with credit scores. So we know those are good enough to do just about anything. However, it's the debt to income ratio that we're a little off on. Now, he said we're really close, and so he wasn't sure yet, but that's where we're at. So that is one option. Another option is a lot of you folks said something about hardship departments at these credit card companies, and that is something we'll look into as well. The hardship departments sometimes will, it depends on your credit history with them, number one, which is stellar for us, and how long you've been with them plays into factors and all sorts of things. And most of my credit cards have been well over a couple of years. So we can call the hardship department, and there's a number of things they can do. I haven't quite figured it all out yet, but I know some of the things they can do is, number one, lower your payments, your monthly payments. They'd have to significantly lower them to make us comfortable. We'd still need, I'd like to see them at least cut in half somehow, but I'm not sure that would happen. Another thing they can do is freeze the interest, stuff like that. I don't know what other options there are, but I know the better history you have with them, the better the history you have with them, the better your chances of them working with you. So that's another thing we're looking into. Another thing we need to do is increase our income. It's hard to do when you have no extra spending money at the end of the week, because what we do, the job that we do, we have to go out and buy inventory. And if you can't buy inventory, you can't make any money. Lately, we've been buying low cost inventory, but when you buy low cost inventory like that, the return isn't very high. So you have to buy a lot more of it, and we can't afford to buy a lot more of it. So we've been, not buying what we should be buying. And so that needs to change somehow. And some of the things I'm doing there is I've talked to somebody about maybe some replenishable type work with the laser. That's in the very infant stages, so that one might take some time to get going. Some test runs didn't work out quite right, and so we're going to work on that one. That'll help us bring in some extra money there if that works out. We've been making some products for Etsy. Maybe in the next video I'll show some of that stuff. Pretty cool stuff, in my opinion, and some more cool stuff to come there. So that is stuff. A lot of the materials are really relatively cheap for that to do, but you can make a significant amount of money on the final product on some of the Etsy stuff. I've been doing some online work as well, and maybe we'll focus on that in the future as well. I don't know where this series of videos is going to go. If we get out from under the debt quickly, the series of videos might go towards more how to make some extra money to be able to pay for things or stuff like that. If I take a long time to get out of the debt, then this series will be more about that. So I'm not sure exactly what we're going to do, but at this time, it's the debt journey, and that's where it's going to go. That's what we've got going on right now. If you liked what you saw, don't forget to hit that like button down there. It's just a simple little thing to do. Subscribe if you haven't already so you can follow along in this journey as well. Share this video with somebody you think it might help. And share the whole series if you think it's going to help somebody. Thanks for watching. You folks have a good rest of your day.